Harmony funds had an excellent February. Across the range, they delivered returns of between 0.7 and 4.3% over the month. The sterling funds proved slight laggards, but all of the other funds gained in excess of 2%. The Australian dollar and euro funds led the way with returns of 4.3 and 3.8% respectively, and having had a good January as well, those funds have now gained 7.4 and 9.3% year to date. Conversely, the US dollar funds had a tough time in January, posting small declines, but more than made up for that in February, with gains of 3% and 4% across the balance and growth profiles respectively. Very much the main driver across all the funds was very strong equity returns across all geographies. In particular, the European and Australian markets led the way, with indices in those regions gaining around 7% in local currency terms. The US was also very strong and clearly is a very large component of global markets. They gained around 6%. The UK was something of a laggard, again gaining around 3%, and similarly emerging markets and Asia also gained around 3%. Fixed income was not a strong contributor to returns relative to that. Most notably though, our holdings gained between 1 and 3% roughly across the various portfolios, which was actually a great outcome, because looking at the US and UK government bond markets, they posted declines over the month of 2 and 4% respectively. So good to get some capital protection and indeed capital growth from that portion of the portfolio during February. Property and infrastructure didn't contribute much to returns this month, but remember they have contributed a lot in previous months. Manager selection had generally a small positive contribution across the funds, probably, but it was mixed. What was most notable was a slight reversal of what's been working in previous months. So our UK managers underperformed, having had a phenomenal run over kind of the medium and long term, whereas our US managers who struggled more recently performed very well. The best performing holding across all the funds was the Copernic holding, which gained around 7.4% in US dollar terms. Again, that's had a tough last few months, but rebounded very strongly in February. There were no meaningful changes to the funds made during February. Just thinking about overall positioning, we retain a very positive view on equities, and the portfolios are well diversified in that portion across a range of sectors, geographies, styles, and indeed managers. Within the fixed income portion of the portfolio, we remain heavily tilted towards low duration, credit, and emerging market strategies, and cash levels in the portfolios remain low. We expect more volatility over the rest of the year, so we will remain very active with our asset allocation approach. It's been an exceptionally strong start to the year in terms of returns, and it's unlikely that will continue in a straight line.